How did you do? How did you find it?
It was actually really okay. Didn't
That's
really have an
good.
issue with it.
So feeling quite confident for tomorrow then.
Friday,
That's
Friday.
good. That's good. Yeah, you should do well. If you just follow the templates and apply the rules, you should be okay. Okay.
There's just two things I actually wanted to go over with you, but it's
Yeah.
not for this exam. I don't know if you want me to go over it now or
Um.
after this.
Okay. Well, what is it? And then we can. I mean, if it's short, we can cover it quickly.
Okay. Let me just email this to you. Um, it's for assignment two.
Okay.
I just sent you the marked version.
Okay. Let me just close this now. All right. So this is one that we did last week. That's two, and then that's three and four. Okay. Okay. Yeah. So let's see. Okay, let me put it up. Okay, here's the email. I don't know if you can see it. Okay, was it marked? Okay, reviewed. Gross income. Okay, I see ticks here. Is there anything else? What? Ticks, ticks, ticks. Are there no crosses? No. How do we know what's wrong? What feedback
No,
did you
so what
get
I
here? What
did
did you
was
get here? Oh, here's the result. 21 out of 25. Okay, that's not bad. Did they give you a solution?
they did.
Okay, and what did we miss, or what wasn't in line with the working?
Just 1 second. Because I wanted, so what they did for the building was
This
they
building, the research
actually,
one, or this
no, it
one,
wasn't the research.
new equipment.
No, it wasn't under research and development. I think they bought another building, but what they did was they multiplied it by 55%
Okay,
and
let's
then
just see. Was there another
5%.
building, or was it this building? Was it this one?
Yes.
Number 12.
Yeah.
Okay,
So
let's see
I'll
what
send
the
you
question
the,
said. Where is that assignment now? Let's go find it. This was what? 101, I think.
okay. So I just sent you the solutions that they gave us.
Okay. This was question 2, assignment 2. Okay, here's the building stuff. Okay. First semester. Yeah, there is only one semester, I think, eh? So this was the right one, eh? Is this the right file?
Yes.
Okay.
Yes.
Okay, let me
So if
just
you
move this
check your
across.
email,
Okay.
I just sent you the,
Okay, so this is what they're looking at. Suggested solution. Okay, let me open up the where did I do this? This was 2021, eh? So this one. Okay, so this was assignment 2. Okay, let's shrink it. Alright, so okay, they didn't mark that, they did mark this. Okay, that's fine, that's fine. The 250, the 300, the 1 million, okay, the 400. This was research. Scroll down. Where's
I
the
think they
research?
got
Here's the research.
500 for
Okay, they
that.
got 500 times 50%. What do we multiply it by? Research building. There's the 400. Okay, I used 40%, yeah. Is it 50 or 40? Let's check in the textbook. Okay, let's find research buildings. Here, this is this is something else. Research and development expenditure, 99. Okay, this was the deduction of copyrights. Yeah, that's the acquisition. Okay, here, research and development. Where's the building thing? Oh, okay, here. Was it this, I think? Section 12C. Let's just see here. This is the building. This is the 11D. Okay, here's the note about the... That's the deduction for the stuff that you research, but where's the building one? Let's see.
No, I think you got the building right. I think it was the equipment that you got wrong, or that we got wrong. Because the building is 5%, if I'm not mistaken. Yeah. Was the research equipment.
Research equipment. Oh, yeah. Okay, research equipment used for manufacturing. What did they say here?
50%.
New research equipment allowance. Okay, so they just times it by 50 instead of 40. So we just need to find the reference to check it. So this is equipment. So it's not, okay, it's equipment. So if it's equipment, we need to look for equipment. Let's see.
I think if you go a bit up and you start reading, I know they said for plant and equipment, your deductions will be 50, 30, and 20. Here's it here.
Okay.
For
right,
machinery.
so that's probably just an error in terms of, I think I assumed buildings instead of, because 12C, let's go see 12C. What is this? This is capital allowances. So that would have been, okay, this if movable assets, if part of, okay, remember this is something we added last week to the notes.
Yes.
Yeah,
yes.
So I would have just used this. Yeah, I would have used the new, so I would have used the 40-20-20 because this is section 12C, which is what they're using. Yeah. Okay, so I think if it's R&D, then you have to use that. Yeah, but this is something we only picked up last week.
Yes.
Yeah, so that's definitely something that had changed then from previous rules and regulations. Yeah, so that's obviously something that you just need to look out for because you'll be using that one.
Yes.
Okay, yeah, so it is 50, that's fine. So that is a mistake. That does need to change because of this paragraph here.
Yes.
Okay, so the R&D. Okay, let's go back. All right, so that's the one. What else? What else was it? What else was it in here? What else was wrong? What else do we need to check? 400, so that's fixed. 24. 24, what is this for? The annuity. Where's the annuity? Yeah, there's the 24. There's the 0. There's the 50. There's the 25. What else? 0.7. Inventory. Where's the inventory? Here, trading stock. Closing stock, opening stock. Okay, here they've gone with 4.5. Closing stock,
yes,
4.7. What was it in the question?
10,000. I think it was 10,000 that was donated.
Yeah, there's the donated stock. So they just showed it as one figure.
No. Oh, I don't know what they did. Let me just open this.
Because let's see, donation I've got there. Donation was 10. Here's the section 18A. There's the 10 donated stock. And there's the inventory. So we took out the 10 from the donation because they've shown 4.5, the full amount. What did the question say? Where's the question? Here. Donation. Here, market value. Here, the closing inventory was 4.5 million. spark plugs removed from trading stock and donated to the rally cap, not an approved public benefit organization. So if it's not approved with a cost price of 10 and a market value of 15, the stock is included in the opening stock amount above, but not in the closing stock amount above. So it was included in the opening stock. Was this the opening? No, this was the closing.
No, that was the opening because that was for the previous year of assessment.
Let me just read it. The closing stock for 2020. Yeah, so that's fine.
Yes.
So we just put 4.5 minus the 10 because the stock is included. So if the stock is included, surely you've got to take it out.
But it was included in the opening stock.
Yeah, so if it's included in the opening stock, that means it was part of the opening stock.
Yeah, but then as long as it's not in your closing stock, because I mean, it's for the year.
Okay, but remember, this is looking at what happened during
the year.
The 2021 year, which we said, let's go back. Okay, so opening stock is subtracted. And they said here, the closing stock accounted for the 2020 year of assessed tax was 4.5. The stock is included in the opening stock. But if this is donated, you can't include it. That's the point I'm trying to make.
My thing is, you donated it within the year. So it should have been in your opening stock. Because say our year ended in March and we only sold it in like October or whatever. So it should be in your opening stock.
But remember, this is stock that you're donating, so it's not part of operation, so it shouldn't be in the opening or the closing stock. Because if you're saying it should have been in the closing stock, it's not in the closing stock because they've taken it out. That's why you show the 4.7.
Okay, but then
because I've taken it out because it shouldn't be in there because it needs to be shown separately.
I don't know. So I would have went with the 4.5. When I read it, I went with 4.5.
Okay, well, maybe it's just the interpretation. I'm interpreting it as in the stock is included in the opening stock. So if it is included in the opening stock, you would have to take it out because this is stock that you are not using for operations. It's stock that's not part of your day-to-day running of the business. So you wouldn't have included it because it would be something that you've donated. So it's donations, not. So you can't.
But say
yeah.
Okay, say so basically they're selling spark plugs. That's what the company does. And so they donated probably from their stock a few spark plugs to who are these people? Rally Club.
Okay, so I see here they have shown a recoupment at market value. So that means, did they show the donation here? Let's see. Where's the donation of the plugs? There's no donation of the plugs at all here. I don't see anything here.
No, the 15,000
That's a recoupment.
the market
That's
value.
not a donation. It's an adjustment for the recoupment of the value of the market, of the value of the stock. Because you shouldn't put opening stock if it was donated, because now you're claiming, so you're subtracting a bigger amount instead of a smaller amount. Because if you look at this, if you add up those two figures, you are subtracting the 4.5 million. Do you see that?
Yeah.
Because this is stock that was donated, and wasn't it approved? Let's check.
Yeah, it's not an approved organization.
It's not an approved public benefit organization. Okay, so if it's not an approved public, then I shouldn't have put the 10 in. So I shouldn't have included this. This shouldn't have Because I said here section 18A, but it's not an 18A because it was not approved.
Yes.
Yeah, that's a mistake. Yeah, so I agree. This says not an approved public benefit organization. So then this wouldn't have applied. So yeah, so it wouldn't have been right to include the 10. But if they're saying the stock was included, I also, I don't think you should have taken it. I do think you should have taken it out. I don't think you should have shown the full figure. Because think about it. If you're showing 4.5 million, you're saying that 4.5 million is stock from last year. But that stock from last year wasn't all the stock that you had. That was stock that you have claimed because this is stock that you're wanting to subtract now because this is opening stock. Because it's opening stock. Opening stock meaning you can subtract it now because last year you would have added it back. Because I'm adding back the closing and I'm minusing the opening. Because you're saying, well, obviously a portion is going to be sold. Okay, so you just want to put the 4.5, but I'm saying the 4.5 has opening stock of 10,000 part of it. So if you're not going to claim it, because you can't claim it.
It's when they don't give you a date of when this donation happened. Because for me, under like if you had inventory, it's like if I had spark plugs, the donated amount would be in it.
Yes, which is
like
4.5.
If I open, it's like if I open this year with 45 spark plugs, and during the year I decided I'm going to donate 10, the 45 would still be my opening stock.
Okay, I see what you're saying because obviously this is the current stock that you have at the beginning. So I'm trying to adjust that stock because there was a portion that was donated. So I'm saying that because you have opening stock, so you would just leave this as 4.5 and then you wouldn't show anything there.
I would, because I mean that stock you didn't get a profit from. So I think it's either you do the 4.490 and you take out this line, or you do the 4.5 and you have the 10,000.
Well, they're putting a recoupment here of the market value. That's what they showed here.
That part I really don't understand.
Deemed recoupment at market value. Let's check this. And let's look at recoupments. Because a recoupment would apply when you sell something. Here, trading stock recoupment, what is this? This is a section 22.8. Maybe here. This is a conclusion. What page would that have been on? Probably before. So somewhere here. There, section 22.8. Okay, here's a proviso. Section 22.8 contains the following provisos relevant to this book. Where the stock dealt with in section 28 has been applied, used, or consumed by the taxpayer in carrying on his trade, the amount included in his income under 22.8 shall be deemed to be expenditure. But that's not what we're looking at here. This is donations. If a stock is disposed or otherwise, an all recorded business including the reduced amount received, recruited, in respect or disposal. That's a proviso, but limited to. So here. Public benefit organization, but see, it's not a public benefit organization. It's not a PBO. So this wouldn't apply because they're not a public benefit, unless I'm reading this incorrectly. What does it say here?
No, they're not.
It said not, eh?
Yeah, they're not.
So if they're not a public benefit organization, that means you didn't actually donate and then you wouldn't have claimed anything. So now they're saying there's a recoupment. Let's see what else we can find here. A recoupment added to income, but a recoupment only happens when you have a sale. Did I sell the stock? Let's think about this. Did I sell the stock? Well, no. I didn't sell the stock because I donated it. So would a recoupment apply to that? No, it wouldn't. Unless there's a specific proviso that provides otherwise. Recoupment. Okay, this is CGT. No, not CGT. This is the general recoupment provision. Let's check that one, page 134. Let's see what they have here. Calculating the disposal. Let's see. You could probably ask them to give you more information on why did they treat that as a recoupment, because there wasn't a sale, because this was a donation. The only thing I can think of is you're assuming that the stock that was kept was sold. So in other words, the closing stock would have been less than what it was or should have been. I don't see anything here. Here's a recoupment allowance, but what is this for? This is for a loan, no. 28, this is the last one, no. Okay, yeah, so that's the 28. Okay, there's actually more here. 29, 31. These are all recoupments from CGT perspective. Yeah, that's nothing to do with inventory. Yeah, this is all chapter 5. Okay, these are capital allowances, recoupments, and that. So this is not what we're looking at. This is something that relates to inventory. The only thing I can think of maybe is that note that, see, these are all allowances for capital assets. Yeah, it's not going to be any of this. Here, go back. Okay, that's same thing again. Recoupments. Capital assets. These are all capital assets. This is gross income. Yeah, this is a business use personal assets. Less recoupments. Okay, here, no, that's also capital assets. Yeah, this is back to 75, then it's going to go back to the beginning. Yeah, the only thing maybe that you could maybe consider is if we go back to it, private or domestic consumption, that doesn't apply. Donations to a PBO, yeah, this is the only thing that you could maybe look at. So when trading stock is donated and the provisions of Section 18 apply, so when it does apply, did it apply in this case? No, it didn't. The amount included in opening stock in terms of Section 22(2) is deemed to be recouped. But that's only when Section 18A applies. So I wouldn't. So why would you apply it now if it doesn't apply? It doesn't make sense to me.
I get you.
Okay. If they said you could donate this to a PBO, then yes, I agree. Then we would apply that provision. But only if it's Section 18A, because that basically states that the stock was too little. So basically you're saying that the closing stock would have been, because your closing stock would have been too low rather than too high. Does that make sense?
Yes.
If you donated stock, then you would have to recoup the stock that was too low by adjusting for it here.
And on that note, why did they use the market value even though it's higher than the cost price?
Well, it's a recoupment. So you would assume that you would have sold the stock at the market value, because the stock would have been sold at the market value. So what they're saying is, so looking at their solution, they're saying that the stock that was donated was Section 18A deductible, but it wasn't though. But if it was, then you would have to recoup it. Yeah, so this you could maybe ask them about. You could state, well, this adjustment is being provided for the stock that was donated, but that stock wasn't donated to a PBO.
Okay, because I know normally when it comes to inventory, we use the lower.
Yeah, but remember, this is not a donation. This is a recoupment that relates to a donation, because the donation is affecting this figure.
Okay.
So the donation is basically saying, basically, try think about it from a tax perspective. What is SARS doing here? SARS is adding back the closing stock. This closing stock is artificially lower than it should be.
Yes.
Because you decided to donate stock to someone else.
Yes.
So SARS is going to say you can't show a lower figure, you need to show a higher figure. because that donation is
Okay.
not my problem, it's your problem. If you donate it to a PBO, SARS still wants the bigger figure. Does that make sense?
Yes. Okay, I get you.
So
I get
SARS is
that.
going to say, add back that amount that you donated because technically you should have sold it.
Okay. All right. That
Okay,
makes sense.
so I agree with this working, but it's not in line with the question because the question said that this was a donation to a non registered PBO. So if it's a non registered
Yeah.
PBO, there is no recoupment then. If there was a PBO, then you would. Because it only applies when there's a public benefit organization, because that's what it says here. Where trading inventory was donated and the provisions of Section 18 apply, the amount is included in the opening stock and it's deemed to be recouped.
Okay.
Yeah,
Okay.
so it's a bit of a tricky one because they're testing the detailed proviso here for Section 22.8. Well, 22.2 for the stock. Yeah, that was a tricky one because it all depends on the donation. But yeah, the donation wasn't Section 18A. So maybe just ask them for more detailed workings for this one. Why did they include that? That's something that you would probably ask. Okay, was anything else
Okay.
here?
Yeah, that's the point I actually wanted to go through. See, where it says building allowances,
This one.
and it's yes, 7 million times 55% times 5%. Why are
Okay.
they using 55%?
We need to check. Okay. Let's see. Where's the 7 million one? 7 million times 5%. Okay,
Yeah,
so you're wondering why there's the 55. Let's check. This was a building allowance. What building allowance was it for? Let's go back.
it was.
There's the
Um,
question. Where's the
yep,
7
it's point
million?
11.
Okay, the 7 million. Denso
Mm-hmm.
purchased and brought into use a new and unused ground floor of a sectional title block from a developer at a cost of 7 million to be used for the purposes of a trade. Okay. Where's the textbook? Here. Okay, so this is capital allowances. This is the building allowances. Okay, here, purchase. Okay, so it'll be somewhere here. There, building allowances. Okay, so let's see. What building was this? This was new and unused. It was a ground floor sectional title office block from a developer used for the purposes of a trade. So I think we assume that this was manufacturing. Okay, buildings erected by the taxpayer does not apply. Purchased industrial buildings, new and unused. Okay, this was the 5%. So I think I went with this one. No, this was new. So that one. For the purposes of a trade, manufacturing, or a similar process. So I think when we did this, if I think back, I think I went with that. Section 13.1. Did I write that down here? Section 13.1. Where is it here? Okay, I
Yeah.
didn't write any section. I just put 5%. Okay, so yeah, it was probably this one. I'm thinking now that was, but now they're talking about a development. Is there anything else here? Let's see. Development, wholly or mainly. Maybe here, let's see. Is there anything? This is when a tenant. Okay, for example, a building has a number of floors. Okay, here. Okay, I see something here about the floor stuff. Let's just see if there's anything else here. I don't see anything there. Let's see here. Okay, this is just an example. Cost of which an allowance is claimable. Is it a commercial building? Maybe, but we assumed it was production. If it's a building, is there any 55% here? Let's see. it might just have been, okay, here, there's a 55%. Okay. Point number 4. As with section 13.1, where a taxpayer constructs a part of the building or an improvement, the allowance is based on the cost of the part or improvement. Unlike section 13A, where the taxpayer acquires a part of the building without erecting, the cost is that. Okay, so this is, let's just read this again. Did this apply here? Let's see. Denzo purchased and brought into use a new and unused ground floor sexual title block from a developer. So, would they have built this? Purchased and brought into use. Okay, if it's purchased and brought into use, then they haven't constructed it. Does that make sense?
Yeah, I would have went with 5% though.
Yes, that 5% is fine, but if you read what we said here, it said here, as with section 13.1, where the taxpayer constructs a part of a building or improve. Okay, they didn't construct. They didn't construct. The allowance is based on the cost of part of the improvement. However, unlike section 13A, where the taxpayer acquires, see, there's the note. They acquired the building. Okay, so a part of the building without, see, that's the point I'm trying to make. It wasn't, they didn't construct it.
Okay.
Right. Yeah, so that is correct. We do need to fix that. Okay, but then that's looking at this proviso, which is section 13 quin actually. It's more restrictive than 13.1. So you wouldn't use 13.1, you would use 13 quin, because 13 quin says that this was bought without construction. Okay, yeah, that's very specific. So you just need to look at this part. Purchase and brought into use without construction.
So if they did construct it, it would be just the 5%.
If they did construct it, then yes, then you would use 13.1, which is this one. Here, no, that's Quinn. Here, Quinn says, provides for a 5% allowance on the cost of any new and unused building owned by the taxpayer, wholly or mainly. Okay, but remember, it's not wholly or mainly because this was only one floor. Okay, so then if you go to section 13.1, let's just find it. Here, 13.1 was when this allowance applies to a building where the taxpayer incurs the cost of erecting. Yeah, see, erecting. Yeah, that's a problem. I shouldn't have used that one because you didn't build the building. You bought and you used the building. You didn't buy and make the building. Or you didn't create the building. You didn't construct the building. Yeah, so that is an error. So incorrect here. Must use section 13 quin. Bought without construction. Right, so someone else developed it. You're just using it. Does it make sense?
Yes.
Yeah, so then 55% of 5% of 7 million. Yeah, that I agree is incorrect based on looking at this again. Yeah, so if I look at this again, it's you didn't construct the building. You just bought a building that was constructed. Yeah, but it's this construct. Where's it now? Let me just find it again. Where's that quin? Because remember, quin does provide for the deduction, but not if it's here. Section 13 quin provides for a 5% allowance. Okay, if the building was wholly and mainly used by the taxpayer, was that the case? No. If it's only part of the building, then you have to use this. Where was it? Number 4. Where's 4? Here. Okay, it was only part of the building. Part of the building. Yeah, they're getting very technical here. Yeah. If obviously I didn't look at it properly. If I did look at it properly, you would have had to have taken it further because it wasn't the whole building. It was only one floor, right?
Yes.
Yeah, that's a problem. Yeah. So if it's one floor, it's not the whole building. Now it's only part of the building. Which makes sense because SARS won't allow you to claim the whole deduction if you're not using the whole building.
Yes.
Yeah, so that is an error. We need to fix that one. Okay.
Okay,
times
the rest from that
55%.
question was fine. It's just for May, June, the 2019, when I was looking at your solution for question 4, part C.
Okay, let me just close some of the stuff because there's a lot open here. Okay, so are you happy with this assignment?
Yes.
Okay, let me save. Close. Okay, May, June 2018. Okay, we haven't got there yet. All right, you're asking about 2019. Okay, I
May,
need to open
June.
up other stuff.
Yeah.
Okay, let me just close all these other things. This assignment can go. Okay, that can be closed. What else do I have open here? Okay, close that. Keep that open. Okay, the rest can stay open. Okay, that's fine. Okay, let's check here. Past papers, May, June 2019.
Yes.
Okay, this one. And this one, the working. Okay, what about it?
So question 4, part C.
Question
Just at
4.
the end,
Part C. Yeah, this one, the provisional. Okay, yeah?
right at the end, why didn't you use, okay, wait. So for your basic amount, right, you had an amount and you times it by 28%, right?
Let me see the question.
So,
This was part C, this one. Okay, yeah? Oh,
it's
SBC.
SBC.
But hold on, let's just read the question here. Calculate this. Okay, yeah. I just overlooked it, yeah. It says way up limited is an SBC as defined in the Income Tax Act. Okay, yeah. Then you have to apply the tables. Calculate
Okay.
the first provisional tax payment clearly state. Yeah, okay. That's just yeah. That's definitely a mistake. Yeah. I just times it by 28%. Yeah, I assumed it wasn't an SBC. This
So
was for
you would
part
still do
C.
that whole, you
Let's
would
just go
still do that
back.
whole minus 550,000.
Yeah, they say it is an SBC. So if it is an SBC, you do have to apply it. I think here they applied what? Yeah, here they applied micro. Okay, yeah, that's a mistake. I can fix
Okay.
that. Yeah, so this we need to correct. I'm just going to put a note here. Yeah, you'd have to apply the SBC tax tables.
Okay.
I'm not going to delete anything. I'm just going to put a note here. Yeah, okay, yeah, that's definitely a mistake. Yeah, you would have to use SBC. If they say SBC, you use SBC. If they don't, then obviously don't. Yeah, so that's just I've just overlooked that. Yeah.
Okay.
Was there anything
That's
else?
it. No, the only other thing that I would have wanted to go over was doubtful debts. It's just for the 25 and the 40%. I get so confused when it comes to which one to use.
Okay, where's the textbook again? Here. All right, let's go look at it. Yeah, this changed. So this is new. Provisional. No. Doubtful debts. I think that'll be better. Easier to find. Was it here? Yeah, I think it's here already. Was the 40% mentioned here? Let's just see. Do you know what page it's on? So it's easier to find. I'm just going to quickly scroll. Here, doubtful debts. Maybe here? No. Next. Next. Here. Was it here? 12 months. Okay, yeah, here's the 25%. Where's the 40? There's the, oh, yeah, here's the 40. There we go. Okay, let's look at it. Okay, so remember, so before it just used to be 25, like it was consistent. It was 25 irrespective. Okay, but now they've brought in a 40% because they're looking at the older debts. So if the debts are very old, then you can claim more as a provision. Does that make sense?
Yes.
Okay, so if you read this, obviously doubtful debts falls outside the section 11A. It falls under a special deduction. So a special deduction provides for deductions of doubtful debts only if you can prove that the doubtful debts are doubtful. So in other words, when you look at the provision where the risk of default has increased, in other words, the older the debt gets, if the taxpayer is making a provision for doubtful debt, the deduction will be 40% of the accounting provision. Okay. Section IFRS 9 is not being applied. The taxpayer can claim 40% of the debts 120 days or more in arrears. Okay, so you can see that in terms of the doubtful debt that's older, you can apply the 120 days. Greater than 120 days. So basically, if you've got provision for doubtful debt, so if you have they call it an age analysis, a debtor's age analysis. If your debtors are older than 120 days, you can claim 40% for tax purposes.
Okay,
You
but
can,
see, like normally when they ask this question, they always put it in terms of provision for doubtful debts for the previous year and for the current year. So this 120 days really doesn't help.
It does because they have spoken about the 120 days, 180 days in one of the previous ones. Was it in the assignments?
No, I don't think they specified in the assignment
Was it not in the
either.
assignments? Because I remember we looked at this. I don't know when we looked at this. It must have been part of the assignment, hey?
And I have the assignment open. I'm just looking for
Yeah,
it.
because I'm just thinking. I think we looked at it in the textbook. So we need to go back. Because I remember you asking me about this, and I remember we went to actually look at it, and I looked at an example, and I think it came from the textbook. So where's the right one? This would have been study unit 5, I think. Special deductions. Yeah, doubtful debt. Okay, I think that's when I looked at it with you. And then I showed you an example here somewhere. Where's the example here? Because I remember looking at an example. I can't remember where was it. If it was the assignment or if it was the textbook. I'm thinking it's the textbook. Let's check.
Because I can give you I mean, we're obviously going to go through May, June 2018. So,
But does May,
like
June
for
8,
question,
2018 have the 60 days and 120 days?
I have no idea. No, but in the question, they do not provide that.
Okay, if they don't, then you just use the normal. You only use this 40 and 25 if they give you the days.
So if they don't give me the days, which percentage am I using?
Then you use the normal one. Where's the notes? Let me go get the notes
The
again.
25.
This is the wrong one. Number 5. Or we can just look at it here. Wasn't it open here? Yeah, it was open here. Okay, so where the risk of default has not changed since the credit was granted, the taxpayer must make an assessment of expected losses in the next 12 months and provide for that. The tax deduction will be so it'll be 25%.
Okay, so if they say current year and they don't give me days, I'm using 25%.
Well, if it hasn't changed, so yeah, that would be for the current year of assessment, expected losses in the next 12 months. So in the next 12 months, that would be from so it would have been the provision that you would have created in the current year. Because that provision would have related to the next 12 months.
Okay. And if they said the previous year, Let me just see which past paper has that one.
Okay, while you're doing that, let me go back to that textbook one. Let's find it here. It was here, wasn't it? Sure, I wish I noted what that was for. I remember we had a question about the days, and then we actually looked at it. Was it in the textbook, or was it in the study guide? I can't remember now. I have a feeling it's the study guide, but let's see if I can find it here. Here's the 40%. Yes, this is what we spoke about. I remember this example now. Do you see it?
Yes.
Okay, so look. Okay, so let's just go back and look at this example. Okay, so this is on page 61. This is solution to 5.1. If you go look at 5.1, where is it? 5.1. Here, somewhere here. It's coming. All right, here's 5.1. Okay, so the only time that 40%, 25% will apply is in a situation like this. Here's the situation, okay? The debtors indicated that the list of doubtful debts amounted to 2.5 million at the end of the year. Okay, so what does that mean? That means that in the current year, you are predicting 2.2 million as doubtful debts. Does that make sense?
Yes.
When you break up that 2.2 million and you look at it in more detail, 500,000 relates to debtors older than 120 days. That's why 40% applies to that part.
Okay.
Okay, there's the 40%.
Yes.
Everything else is always 25%. It only applies when they give you more information about the split. In other words, the likelihood of receiving or not. Does that make sense?
Yes.
Okay, because that's what the legislation provides for as well. The legislation says where the risk has not changed, use 25%. Do you see that?
Yes.
Where the risk has changed, use the 40%, but only if you can differentiate between the days that are older and the days that are newer. Does that make sense?
Okay. So can you look at May, June 2019?
Okay. So May, June 2019, is it this one? I think it's still this one. May, June 2019, yeah? Okay, what page?
Okay. Question 2.5.
Question 2.5, this one. Okay,
Yeah,
so in this situation, the accounting provision for doubtful debts on the 31st of March amounted to that. Okay, and on the 31st of March amounted to that. Okay, so here you've got two different years.
Yes.
Okay, so what year are we looking at? What year was this?
2019.
2019. Okay, so 2019 would have been the current year. So the 800,000 is for the current year, and the 750 is for longer than that. So I want to check what I do. Let's see. I'm thinking it's 40 for the 75 and 25 for the 800. That's my gut. Where's my May, June 2019? It's this one, eh? Okay.
I think your answer just said 25, 25.
Was it just 25, 25?
Because I think we also corrected this on your slides.
Let's see.
So I don't know if this is a new...
Yes, okay, yeah, here's 25. The 25, 25. Because, okay, so this one can be assumed to be greater than the 120 days because, oh, hold on. It can't apply here because remember, this is the last year's provision and the current year's provision. They're two different provisions. That's right. This stays as is. No change. Okay, remember 25-25 is what you would have claimed last year. So this is opening and closing. It's correct.
Could you explain that, please?
Okay, so go look at this example. Where's the textbook? Here. Okay, 2019 is still last year. 2019 last year would still have been 25%. The 25% will always apply. But it's last year.
Okay.
That's like the 2018 and 2019. This is 2018
Right.
and 2019. This is 2019. This is 2020. It's always 25%. The 40% only applies to the current year.
If they specify.
If they specify, yes. Because
Okay.
remember,
So basically,
you're going to add last year's provision, but 25% of it.
okay.
Because what is the doubtful debts last year? Let's go back to that page. Was it page 20, I think? Let's go to page 20. Where's the provisional for doubtful debts from last year? Where's last year's one? Yeah, okay, they told you what the provision was. They told you what the allowance was. Not the provision, the allowance. They told you what the allowance was. So last year you claimed this allowance. This year you're going to add it back. Does it make sense?
Yes.
Okay.
So you don't use 25%.
You would have used 25% if they told you what the provision was, not the allowance. The wording here is different. Look at the wording here. The wording says allowance. So that means how much you claimed. Last year you would have claimed 25%. Does that make sense?
Yes.
Okay, so if you look at this question, where's 2019? I need to open it again. In this question, I think they gave you the provisions, not the allowances.
Yeah. They gave us provision here.
Exactly. So if they give you the provision, you have to times it by 25%. Yes. See, this is a provision. Okay, if it's a provision, you're timesing it by 25%. Because only the provision is an estimate of what is allowable. SARS is not going to allow you to claim all of it. SARS is only going to allow you to claim 25% of it. So that means last year there was a provision, only 25% of it would have been claimed. It's a different question.
But technically, it would have been more than 120 days, is my thing.
No, you only apply the 120 days to the current year.
Are you sure?
Yes. That's
Okay.
what we just looked at.
All right, let me make a note. Okay.
Okay,
So-
let's go back. Here. Okay, the 40% only applies to the current provision. So in this scenario, what is the current provision? 2.2 million. Right?
Right.
Okay.
Yes.
How much of that 2.2 million is older than 120 days? 500,000. Because this relates to IFRS 9. Because remember, accounting also changes, so they're providing for a bigger provision. So I think that's why the tax changed as well, because it's 40% for the older and 25% for the normal.
Okay.
So if
So if
it's
they don't
older,
give you
you get to
days.
claim more, only for the current year's provision.
Okay. All right.
Okay, the previous year is the previous year. Ultimately, in the previous year, you would have claimed it, so you wouldn't have to recalculate that. Does that make sense?
Yes.
Okay,
Unless
this
they give you a
question
provision for it.
is a bit of a dumb question because you wouldn't calculate last year. You would have last year's already. Does that make sense? So UNISA's
Yes.
giving you something that doesn't even relate to the current tax year because you would have to have
Okay, so-
applied last year's tax tables to last year's allowance or last year's provision. Does that make sense?
Yeah. So for that question,
Yeah.
would you have to create a provision of 25% or would you have to claim that amount?
You would basically have to include the 25% that you would have claimed last year. That's why I timed it by 25%, because I'm saying
Okay,
that
so-
that's what you would have claimed last year when it happened last year.
Okay, so would that be a positive number on your?
Yeah, you'd add back the one and you'd subtract the other.
So you'd subtract the 800,000.
So you'd add back the last year and you would subtract the current year. Yes, that's exactly it.
Okay. Okay, got it. Noted.
Yeah, because remember, again, just think about it from a tax perspective. SARS wants you to claim this, but they want you to add back that because it didn't actually happen.
Yes.
Okay.
Okay.
Yeah, it's correct. There's
Okay.
nothing wrong with it, but yeah, the new legislation does change how you would do this going forward, but it only applies when you have the current year's provision. So it only applies to this.
Okay.
Then you check the days. Okay, because then you're basically telling SARS, well, SARS, I have a situation where I have 800,000, okay? I know a lot of it is over 120 days. So can't I claim 40%? SARS will say, yes, you can.
Okay. All right. That makes a lot of sense now.
Okay, that's good.
So last year you would have to add back. I think that's where I was not understanding. But I get
Ooh,
it.
yeah. Okay, you can't claim a
Yeah.
provision twice because you already claimed it last year.
Yeah. So I was thinking of like because you're subtracting both, one has to be 25% and one has to be
No, yeah, you're
40%.
not
But now I
subtracting
get it.
both. They're 2 different years. This was last year, this is this year.
Yeah. Okay.
Okay, that's good. Yeah. So don't forget to add the one and subtract the other. For example, here, one more time. This one is the current year. Does that make sense?
Yes.
In
Okay.
this example, they didn't give you the provision last year. They told you what you claimed last year. So that's why you just add it back.
Okay. Right. I got that.
Okay. Because if you go to page 61, that's what they should have shown. Yes, see, they added
Yeah.
back last year,
Yeah.
and then this year they provide for the provision.
Okay.
Okay, yeah, these are good questions. It's good we're going through this. So at least, yeah, because that could be a, but remember, that would be a tough question. That would be difficult if they give it to you, because it hasn't come up in a past paper yet. Well, maybe it did.
Okay.
I don't know. We don't have 2020's past papers, but yeah, this
And they
was new.
still
This was something that I picked up this semester. Yeah, you must look for it.
okay. I got
Okay.
that. We can mark May, June
Okay.
2018.
Ooh, I closed that. Okay, it's fine. I'll open it if I need it. Okay, May, June 2018. Let's see how you did. May, June 2018. Okay, this was question 2. Okay, this was solar. Are there an SBC? Yes. Okay, you've got income and everything, so you put all of that in. Let's see. That you've put in, that you've put in, that you've put in. Okay, recoupment you probably would have calculated. Okay, the office rent expense. Okay, there's the 20. There's the 65. Okay, you're just inserting these figures. Okay, so all those figures you've inserted, that's fine. Now we need to look at each of them. Okay, let's check each of them. Number 1, second-hand manufacturing machine purchased on the 1st of August for that amount. In January of, okay, what year was this?
This was
End of Feb. Okay, so
28.
we just need to remember end of Feb. Okay, so end of Feb. All right, so if I buy during August, is this during the year? Yes. Okay, in January 2018, after incurring many repairs to machine SS, the company sold this machine for 200. Okay, yeah, so there is a recoupment here, but the recoupment would have been limited to the prior year's allowances. Replaced it with machine 3. Okay, so let's deal with the easy ones. Okay, so the second hand, SS1. Did you claim an SS1 deduction? You did.
Yes.
Okay, that would have been in the year of the purchase. I need to check the rates. Was it 100%? I think it is accelerated, hey?
Yes, it's 100% for SBC.
Yeah. Ooh. This one. Yes, manufacturing 100%. Perfect. Yeah, this is section 12E. That's correct. That's good. Yeah, so if you did that, that's correct. Okay, so you would do that for the Manufacturing vehicle, and you would do that for the new one as well. So did you do that for the new one as well?
Yes.
Yes. Okay, that's fine. Okay, so the only thing we need to check is the recoupment. The recoupment would have been limited to previous allowances. The previous allowances was 270. The recoupment is 200. That's perfect. But please show that. Again, you're forgetting to show those workings. They might give workings to this.
Oh, so must I, because I just put it in brackets, my calculation.
Yeah, that's fine. The calculation's fine, but you just need to mention that it's limited to the previous capital allowances. So previous capital allowances is 270. So remember, you could
Yes.
have sold this machine for more than the carrying value.
But okay, let's say if I sold it for 300,000.
Yeah, then you would only have a recoupment here of 270, and then you would have a capital gain on the balance
Okay.
because it's CGT now. Okay, recoupments are limited to the capital allowances because whatever's not recouped is CGT.
Okay.
Okay, yeah, so that one's fine. Non-manufacturing, new delivery vehicle, still in use. Okay, so these are other things. These are non-manufacturing things. So now you need to go look at non-manufacturing. It is an SBC, so we can apply 50, 30, 20. Do you see that?
Yes.
Okay, so did you apply 50, 20, 30?
Yes.
Okay, let's check. This was for non-manufacturing. Yeah, non-manufacturing. Where's your vehicle? Here's your vehicle. 289,999 times 30%. When did you buy this? December 2016. So December 2016 would have been end of. That would have been the tax year, 2017, Feb 2017. That would have been the first year. This is Feb 2018, which is the second year, which is 30%. Yeah, I'm happy with that.
Okay, wait, okay. So do you know for computer, right? If it was not an SBC, would we use section 11? E.
If it's a non-SBC, then you have to use section 12C, wear and tear, but this is manufacturing. So a computer is not part of manufacturing. So then you would have to use the 11E. So the normal, you would
Okay.
use this one, other movable assets.
So the one with the years and that you would apportion.
Yes, definitely. Yeah, you have to. Is that okay?
Yes.
Okay, but yeah, because this is SBC, we need to apply 12E. Okay, so you did that and you did that. That's fine. Happy with that. I'm not going to check the workings. I assume these workings are correct.
Okay.
Okay, so I assume you multiplied this by 30% and you got that answer.
Yes.
Okay, yeah, so I'm not going to check that. When I say checking the workings, I'm not going to do the calculations. I assume that your numbers are correct.
Okay.
Okay, I'm just going to check the logic. That's the more important bit. Okay, so yeah, your logic is correct. That's perfect. That's perfect. Half of it should be that, so that should be fine. Happy with that.
Yes.
Okay, yeah, because I want to try check all of it if we can. Let's try get through this as quick as we can. Okay, provision for doubtful debts. Okay, so here, provision for doubtful debts for the current year is 400,000. The doubtful debts allowances of 95 was claimed last year. So did you add back the 95? Yes, that's good.
Yes.
And did you take out the
Good.
current provision? Okay, that's good, but it's wrong. You can't claim
Yeah, the 20.
40%.
I learned that today.
Okay, yeah. Yeah, so it's always 25%. Um, the 40 only applies when they give you a consideration in terms of the current year's provision based on the number of days. Okay.
And the bad debts was actually in the table. So if you saw, I did that above.
Uh, Bad debts written off including a loan. But was the table before or after these adjustments? Did they say anything about that? The following information is provided to you for the companies you have said ending on. Yeah, but remember, bad debts is the current bad debts. So you can claim that. This is a provision. Provisions are completely separate.
Okay.
Okay, bad debt is bad debt. So bad debt is what you write off. Bad debts written off, including a loan to a deceased employee. Okay, so you took out the loan from the deceased employee.
Yes.
Okay, and you just wrote off the bad debt. Yeah, that's fine.
Okay.
Yeah, bad debt is bad debt. Bad debt is separate from the provision. Yeah.
Okay.
Okay, yeah. So as long as you wrote in all the figures that they gave you, that's fine. Okay, because remember that figure what didn't have a note, so you would have written it as a separate claim figure. Yeah, so okay, maybe I should have gone back and checked each line item. Okay, did you put your sales in? Yes. Did you put your income in? Yes. Did you put your rental in? Yes. Did you put your repairs? 65. Yes. That's a section 11A. Did you put in the bad debt? Yes. Okay, that one's fine. And then all the others had notes. Yeah, so the note ones we'll check. Okay, that's fine. Yeah, there was only one that didn't have a note. Okay, so far so good? Happy with that?
Yes.
Okay, so we are up to number 3. No, number 4. Okay, salaries and wages for expense amount to 125 for employees' pension fund contributions. Okay, so this is something you need to consider. The salaries and wages, 125 was for employee pension contributions. So did you take it out? Yes, that's good. You took it out of whatever it was. Yeah, okay, that's fine. Happy with that. So you claim the difference? Yes. Okay, then the pension stuff you need to consider. Okay, the pension stuff, I think this is where that whole, is it the practice note? I don't know if you remember what I spoke about when we did this.
Yes.
Okay,
Yes.
was it 10%? Was that correct?
Yes, it
Okay,
was.
so you're using the 10% according to the practice notes.
I don't know if it was this part that was because I remember I found this under section 11L
Okay,
in the
let's go check.
textbook, the 10%.
Pension. Here.
Yeah, so it's section 11L.
Yeah, I don't see anything there. This is the PBOs. Okay, I think if you go look at the legislation, this is the practice note. Yeah, I think this is the practice note one we spoke
Okay.
about before. We can just quickly go through all of these and see here. Here's 10. No, not 10. Here, there we go. Yeah, here's SARS practice note. Yeah, there's it there. That was what I was looking for. Yeah, but it's 10% of the salaries and wages. Yeah.
Yes.
So you put that 10% contributions made to the employees fund. Yeah. Isn't that what they said here? 125 for employees pension contributions. Yeah. Contributions to the pension and medical aid 10%. 10%. Let me just see here. I'm trying to remember what they did here. Okay, limited to 10%. So limited to 10% of the salaries and wages. Okay, so we need to fix this. Limited to 10%. Okay, I see you've shown it. Yeah. Okay, you've shown the 10% limit. That's fine. How much was it? 125. So you've only put the limit.
Yeah.
Perfect. Yeah, happy with that. But also, you need to show more of this, eh? Okay, yeah, I would have wanted to see that just so I know what you're doing. Because a portion
Okay.
isn't deductible. So you're stating in terms of tax rules and laws that the 125 could potentially be deducted, but not because of a limit on the 10%.
Okay.
Yeah. So I would have wanted to see that, but they'll probably still mark that correct. I think what they do is they probably check for this. If that's correct, they mark it. Then they don't look at the working. If it's wrong, then I think they look at the working. Well, at least I hope they do that, yeah, because they should be giving you marks for your workings. Okay, the travel. Okay, here he went with his wife. The trip cost 60, 40% was for the director, 20 was for the wife. Okay, let's see your working. Travel expenses, you took out the wife's. Good. Private expenditure not deductible. Yeah, that's fine. Okay. The advertising prepayment. Okay, here's the 6 month and the 100,000. Okay, so what did you do? Let's see. Prepaid off 380 for various advertising mediums for the period 1 July to June. Okay, so 1 July to June is July, August, September, October, November, December, January, February. That's 8 months. So 8 months is in the year. So did you take 8 months in the year? Yes, you did. That's good. Okay. Then I need to count February. So it'll be March, April, May, June. That's 4 months. Okay. So the 4 months is the balance, and the balance needs to be lower of within 6 months or lower than. Okay. So does that apply?
Yes, it's within 6 months.
Yeah, so you claim the full amount. So the whole amount would be claimable, which would be 380. Yeah, happy with that. Okay. Next, the patent. Okay, so the patent was valid for 5 years, was purchased for 650. Okay, so this we need to go check. What did you do? You used 5%. Did you check that with the legislation though?
Yes, because
Okay.
10% is for a design.
Okay, yeah, I trust you with the checking. Okay, so if you're using the 5% for the patent, then that's fine. Okay, as long as it's for the patent, hey?
Yes.
Okay, if you checked it, I'm happy with that. I'm not going to go back and check it, just to save time. Office, construction, and factory. Okay, this one we need to look at the dates. Offices were built next to the existing factory by SLS during the current year. 350,000. It was completed and brought into use. Okay, so did they build this? Yes, they did. They actually built it and they brought it into use and they completed it. So you would use the 5%. I'm happy with that. The factory building was purchased new June 2010 for 2 million and was used wholly for the manufacture of solar powered lights. Okay, is this still within the 10 years? It's 5% a year, so it's 20 years, I think. 5%, 5%, 5%. So you also claim 5%. Claims the building, yeah, so that's fine. Also happy with that. Okay, this was perfect. Okay. You worked it out and then you applied the SBC, right?
Yes.
Looks like it? Okay, so it looks fine. Okay, I trust the working. I hope it's correct, eh? Okay, the workings, the maths. I'm not going to check your maths. I assume your maths is fine.
Okay.
What I am going to check is just the table that you used. Let's see if you used the right table. SBCs. Okay, so you used the last line, the 558. I don't see 558. Oh, there I see it. Okay, yeah, it's correct. Yeah, your maths looks fine. Okay, great. Next question. Where's the next one?
Oh, and the reason.
Next page.
Oh, it's the next sheet.
Yeah, don't worry.
Sorry.
Got it. Sorry, what were you saying? The reason?
I don't think I did it for this, but it's fine. The reason that it's so cramped till I is because I have to put it on a PDF when I submit. So I'm just keeping my templates that size.
Oh yeah, don't worry, that's fine. No stress. Okay, I really don't mind what it looks like as long as I can interpret everything. It's fine.
Yeah, just
because you're going to use the same templates when you do this in the exam. Now that's perfect.
Yes.
So that's clever. That's called good exam preparation. Nice. Okay, so yeah, other students need to learn from you. You're very good.
I will host a class.
You can. Yeah, you can do this one day. Okay, you can help the UNISA students after you finished your degree. Yeah, it's not that bad. You can even tutor this even, yeah. Okay, are you happy with that?
Yes.
Okay, number 3. Okay, here's a nice question. Okay, we did one last week that looked the same. Okay, let's check your workings here. Did you use... Okay, you have split it. Ooh, I wouldn't have done it that way.
The reason I split it is because I think I saw...
Yeah, no, it's fine. I understand why, because you're going to submit this. So I get that. But I would have, I would have wanted to see it like the whole thing. Where's, okay, the other one, not this one, the other paper we did. But it's fine. We'll keep it as is. Okay, it's fine. Leave it like this, as long as it's correct though. Let's check.
Okay.
Okay, so let me see what we're dealing with here. What's the date of the year? Where's that information? Here. No. Okay, what's the year end? Let's read it. Okay, M Limited purchased a warehouse. Okay, so this is a warehouse. 1st of August for 980. The warehouse is used for manufacturing. Okay, the warehouse is sold. All right, so there is CGT. This was 1st of August. That was before CGT. Do you agree?
Yes.
Okay, let's see what else. Okay, you've got some commission here. The date of the sale, at the date of the sale. Okay, they've given you the capital answers. That helps a lot. Okay. Market value, that was at CGT, so they've given that. Assume the time apportioned base cost, so they've given that as well. That's good. Okay, so you're going to have to do those workings later. Okay, on the 3rd of July, the company sold one. Okay, this is a different asset. Okay, so what do they want first? Warehouse, 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 warehouse. Okay, they want all the warehouse first, and then the last bit is the machine. Okay, so the warehouse is the difficult one. Okay, so question 1 was tax value. All right, tax value is cost minus allowances. Perfect. Did you use the right tax value? Let's check. Did they give that to you? They gave you the cost, yes. You calculated the tax value with the allowances. Yeah, that's fine. I'm happy with that. Okay, that's good. What did they want next? The recoupment. Okay, the recoupment would be limited to. Okay, so here, again, you need to add that. Okay, allowances previously claimed. Okay, what were the allowances previously claimed? The 784. Happy with that?
Can you just say that again, please?
Okay, so when you work out the recoupment, let me show that to you again. Where's my notes? Not this one, other one. 7. Here. Okay, when you're looking at the recoupment, here the recoupment needs to be limited to the previous allowances because your adjusted proceeds will be the selling price minus the recoupment. The base cost we need to look at. Okay, so let's just go back to this here. Okay, so you've calculated the tax value. What were the proceeds? Okay, let's go back to your working. Okay, so to get the recoupment, I need to know what the cost was. What was the proceeds? The warehouse sold. The proceeds was 1630. So 1630 is the proceeds. You've got that. Okay. What was the cost? Okay, this is greater than the cost. So if it's greater than the cost, there will be CGT. So your recoupment will be limited to the capital allowances. So it is correct, yes. Okay.
Your cost was 980.
Yeah, the cost was 980. Right.
Yeah.
But remember, your allowances were 784. So when you look at the recoupment would have been limited to the previous capital allowances claimed. Because remember, when you're working out CGT kicks in after your cost, higher than the cost. Remember we drew a diagram?
Yes, yes.
Okay, so that's what I'm trying to say when you're looking at B. See, because I would have done it as a long working and then I would have pulled out what I needed. Does that make sense?
Yes.
Okay, yeah, I'm just thinking in terms of the structure we had last week. Okay, but obviously you've just split out the stuff that you needed to. Yeah, so I'm just thinking in my brain what's happening. So limited to, which is fine. You've shown that, that's fine. I would have shown the full amount and then I would have said limited to because the rest would have been CGT, which is fine. Okay, your working's okay. That was B. Okay, you see, they're giving you 3 marks here because I think there's a mark for theory.
Okay.
Okay, that's why I think there's an extra mark. Okay, because this is 2 marks. There's mark number 3.
3. Okay.
Okay, because you're stating that it's limited to. Because it's actually more than that, but the rest of it is CGT. Does that make sense?
Yes.
Yeah, because I would have shown proceeds minus tax value. I would have shown 163 minus tax value of 196. Does that make sense?
Yes.
Limited to the 7084. That's how I would have shown it.
Okay.
But yours is fine.
That
Final
makes
answer is still correct though. But like I say, I don't know how they're marking this. Okay, just be careful with that. All right, adjusted proceeds. We just spoke about that. I showed the slide. Selling price minus recoupment. Selling price minus recoupments. Yes. Okay, valuation, date, value. Then you need to use that whole stuff from the notes. Okay, did you copy paste it as is from the notes?
I did copy it. I just retyped it, but it's the exact same thing.
Okay, then that's fine. I'm just going to use it as is. I'm not going to go back to the notes then. Okay, then I'm going to just do the working. Let's go look at the question. You had valuation date value if proceeds are greater than base cost. Please show that as well, hey? Show the proceeds.
Oh.
The adjusted proceeds were
846.
Yes. Okay, so you can show the proceeds. You could even show the adjustments. The recoupment was 784. Okay, the base costs. Okay, greater than the base cost, which obviously is. Okay, because the base costs technically is either what you paid for it or the other stuff. Does that make sense?
Yes.
Okay, so we'll show that just now. Then the valuation value. Okay, valuation highest of. Market value, did you have the market value? Yes, okay.
Yeah.
If this is used, the adjusted proceeds, if this is used and adjusted proceeds less than the market value, were the adjusted proceeds less than the market value? This adjusted proceeds, what is the market value? It was less than the market value, so that does apply.
Yes.
Then the valuation value is the adjusted proceeds less the allowable deductions. Okay, did you show that?
I think I did a little bit down. Where I said,
Here.
therefore.
Okay, yeah, that's fine. I would have just shown it there, but it's fine. You've shown it there. That's fine.
It's
okay.
Because, yeah, okay.
Okay, let's check your other line items. If the proceeds are greater than the market value, that does not apply. That's good. See, that they might even mark. 20% of the adjusted proceeds less allowable costs. Okay, 20% of the adjusted proceeds minus the allowable cost. You've got that. That's good. Time to portion base cost. That's good. Okay, so which is the biggest amount?
It was the market value.
Yes. So I would have just shown that here. Okay. So what is the valuation value? The valuation value is the adjusted proceeds less the allowable. Yeah, so I would show that there. Okay, and then it's perfect. Okay. Yeah. Okay, so your valuation date value is 756. Happy with that?
Yes.
Okay.
I'm sure I filled that in. Oh, I did fill that in. I just filled it in under, yeah, because
it doesn't matter. It's fine. Wherever it is, it's okay. I'll delete that then. Okay.
Yeah.
Hold on. That was E. Yeah,
no, they actually they did it very weirdly. So D was the valuation date value, and then E was the base cost.
Okay, yeah. So valuation date value is the highest of. So the market value. So the 980. Make sense?
No.
Okay. If the proceeds are greater than the base cost, then the valuation is the highest of market value. So what is your highest value here? The market value.
Right.
And your market value, if this is used, the adjusted proceeds greater than the valuation value is the adjusted proceeds less the allowable deductions. Yeah. Okay, so the highest, the valuation date value, the valuation is the highest of. So I just want to know where you put your answer here because I don't see an answer. Is it the 756?
Yeah, the reason
Okay,
I
that's
didn't put
fine.
it in a table is because I still want to use the format that I learned with you. So where you
Yeah.
would less base cost, that's why I didn't want to put it in the end.
Okay, yeah,
If
that's
that makes
fine as
sense.
long as you're happy with what you've done here.
Yes.
Okay, then that's fine. All right. E, base costs of the warehouse, date of sale. So the base costs before commencement is the valuation value plus the allowable cost. Did you show that? Let's see. Hold on. You went with minus. It should have been plus. Do you see that?
For which part?
For the base
Oh,
costs.
no, no, in my brackets, the minus I was referring to was from above. It's the adjusted proceeds less allowable deductions, which we calculated above. That makes sense.
Okay, but there are allowable costs. The allowable cost was the 90,000 agents commission.
Would that go under allowable cost?
Well, when was this valued?
After.
1st of
Okay.
March. Oh, okay. If it's after, then we need to look at this. Yeah, post
Yeah.
CGT.
Okay.
Happy with that?
Yes.
Okay, so you do have to add the 90.
Okay.
So the base cost would have been the 756 plus 90. Happy with that?
Yes.
Ooh, I hope the working
I
didn't
think
mess up.
maybe I think maybe add it in that space, please.
This one.
Yeah, if you say equal.
Happy?
Yes.
Okay. Machine, and both of them. Okay, so machine base costs. Right, so we need to check. This is after CGT. So let's see here. This is the machine. Okay, so on 3rd July, the company sold one of its ceramic tile
You
manufacturing
wanna,
machines. The
can we
selling
finish
price.
off
Huh?
the previous one? So basically our capital gain or loss is 0.
Hold on. What are you looking at? This one.
Yes.
Okay, so what were your adjusted proceeds? That.
Mm-hmm.
And what was your base
And now this is
cost?
the,
This.
yes.
So the pros, yeah, so 0.
Is that normal?
It can happen because remember, you're valuing the asset as it changes value. And remember, this was pre-CGT.
Okay.
Okay, you can get a capital gain or loss actually. So this could have been a negative even.
Yes.
So it doesn't have to always be positive. It could be either or.
Okay.
Okay, that needs to be fixed.
Yes.
Okay, so yeah, this is a nice asset to have because no additional tax. Okay,
Okay.
because remember it's part of legislation. Just follow the rules. All right. Where are we? Was it F or E? Which one?
We just finished F.
Okay, here's the machine. Okay, yeah,
That's very
all of
cheap.
this needs to change. Make sense?
Yes.
Okay, it was for 1 mark, so I don't think there's much to do there, eh?
Okay.
Yeah, also look at the mark allocation as well. Right, I mean, you did so much. You should have gotten at like 3, 4 marks.
Yes.
Okay, yeah, it's a different question. So 1 mark just for 0, basically.
Okay.
All right, what else? Next one, machine. Okay, the machine. Uh, let's go up. Okay, what did you want here? You wanted the base cost and the capital gain. Okay, so you need to do all of it actually. Okay, so let's read this. The selling price, adjusted proceeds you've got. Did you put that in? Where's your adjusted proceeds? Here.
248.
Okay, selling price minus recoupments. Was there recoupment here? Let's check. What did you sell it for? This was. Okay, they've given you the selling price and they've given. Okay, you don't even have to work that out. They've given you both. Okay, so
Yeah, I worked it back
you've got it.
just in case.
All right,
Yes.
that's fine. The second-hand machine cost 160 and brought into use. Capital allowance today is 128. Okay, so the tax value would have been the cost minus the allowances. Hold on. Let's read this again. Okay, let me do it my way, just to make sure I'm doing this correctly. Okay, so what am I looking at here? I'm looking at the machine. Okay, I want the base cost for the machine. Okay, is this after or before CGT? Let's go back and check. This was after. Okay, so if it's after, costs minus allowable deductions. Okay, all costs minus allowable deductions. Fine. Okay, so the second-hand machine costs 160 and was brought into use on the 20th of Feb 2015. So that's the cost. And they tell you what the capital allowances were claimed. Okay, so that means, hold on, is this a different machine? On the 1st of July, the company sold one of its ceramic tile manufacturing machines. The second-hand machine cost. These look like 2 different machines. Or is it one machine?
I assumed it was one machine, but now I don't know.
Yeah, because I'm looking at it and it seems a little bit strange because is it one machine? Let's read it. On the 1st of July 2017, the company sold one of its ceramic tile manufacturing machines. The selling price was that and that. The second-hand machine costs and was brought into use.
I think it's one machine.
Okay, let's assume it's one machine because then they give you the capital allowances here. So your tax value is the cost minus the allowable deductions. So the cost is 160 minus the 128. Okay, so it is 32. Okay, tax value. Yeah, I wouldn't have shown that, eh? I would have just shown this. That's why I'm a bit confused, but I see what you've done. Okay.
No, but then see, on these slides, it's kind of like the other way. Because when you calculated, your tax value is 32,000, but they gave us a tax value of 128,000.
No, where do you see tax value here?
Wrong? So I got cost.
Hold on.
No, if you work
the tax
backwards,
value is 32,000.
See, okay, wait. So they basically gave us our selling price and our adjusted proceeds, correct?
Yes, that's what we saw there.
So then we get the 32,000, which has to be your recoupments.
No,
so if you work
no. See, you're trying to do like other things in one go. Remember, okay, how do you calculate tax value?
Cost minus capital allowance.
Yes. So, what is the tax value in this question? the cost minus the capital allowances. Okay?
Okay.
So what was the tax value in this question?
Okay.
The cost. What is the cost?
160.
Yes. What is the capital allowances?
100. Okay, fine. Okay. Work downwards. So if you had to work out your recoupment.
All right, because that's why, see, I don't agree with that. Tax value is not 128. There's a problem here. This is wrong.
Okay.
Okay, copy paste.
But if you have to continue.
Okay, now that you've calculated the tax value, now we need to calculate the recoupments. So the recoupments is going to be limited to the previous capital allowances given. So proceeds minus tax value equals, what were the proceeds in this question? The proceeds in this question were 280.
Yes.
The tax value in this question is 32. So you need to show that, because that's what the legislation says you have to do. So it might still be correct, but you're not showing what steps you need to cover. Okay, and that's limited to capital allowances. All right. Okay, that's why it's just the way I do things, because I just follow a set formula, a set method. I don't, like, I really don't care how UNISA tests it, because I'm always going to do it in one specific method, and then I'm just going to pull out, same as what we did last week. How I did it last week is how I'm doing it this week. That's why that's why I don't like it. I like that they've broken it up, because then you will just copy paste what you need. But I'm never going to do it like this. Yeah, it's a bit weird. Okay, but it's fine. Okay, so what were the previous capital allowances? 128. Does that make sense?
Yes.
Okay, so therefore, the recoupment is 128. Okay, so what did they ask for there? B was calculate the recoupment. Okay, your recoupment was different.
No, you're kind of mixing up the questions. They basically gave you your adjusted proceeds, because we're on G.
Okay, calculate the base cost. Okay, we're going to get there. We're going to get to base cost. Okay, we haven't finished it yet. Okay, so fine. All right, so I've got my recoupment. Let me go back to my notes. My base costs. Okay.
Okay, wait. Can you just finish the top part if they had asked for it, please?
What do you mean the top part?
So if they asked for your recoupments, you would have went with 128.
Yes.
And then how would you have worked out your adjusted proceeds?
Adjusted proceeds would have been selling price. So delete that. Copy paste this. Okay. Adjusted proceeds is selling price minus recoupments. So it would have been, what is the selling price? 128. 228.
No, the selling price 280. Yeah.
Yeah, 280 minus the recoupment. What is the recoupment? 128.
Yes.
So the adjusted proceeds would have been 152.
But see, that's where it's wrong, because they gave us an adjusted proceeds of 248.
So then this must be a different asset then.
because the way I worked it was very similar to this, but instead of starting with your tax value and working down, I started with adjusted proceeds and worked up.
Yeah, but then
If you
but
get
then the
what I'm saying.
second-hand machine is a new machine. Then it's a different machine. It's unrelated to this one.
So then which machine do they want us to work it out for?
Probably the first one, but you're saying it's the same machine because then see the allowances that then it doesn't make any sense because what were the capital allowances 128 we cannot not use that. Doesn't make sense.
Yeah, no, I definitely get the way you did it. But when I did it, I just started with adjusted proceeds and basically worked backwards. If you get what I'm saying.
Yeah, I know. I deleted it, so I don't know what it was. I don't know what it looks like. I'm gonna have to open it up again. Where's your working? Okay, let's just answer the question in line with what they're asking you to do. This was H or G. This was G.
Yes.
Calculate the base cost of the machine on the date of the sale. Okay, fine. So base cost is going to be the historical cost with all the associated costs to set up and install. After CGT or before, what is this? This was after. So costs minus allowable deductions. So all the costs. So how much I paid for the asset minus all the allowable deductions. So how much did I pay for the asset? I paid 160 for the asset. What were all my allowable deductions? 128. So 160 minus
Yes.
120 would be my base cost.
Would capital allowances be a deduction?
Yes.
Because on the slide it says historical costs. So like your setup, your transport.
Yeah, but there was no setup and transport here.
That's why I use 0.
So this would have been allowable deduction. We're not looking at before CGT, we're looking at after CGT.
Yes. So your
So
allowable deduction.
an allowable deduction is something that you subtract because it's a deduction.
Okay, if you go to the previous slide, see, it says similar to accounting, historical cost, all other costs
Yeah, so if you're
associated with
including the costs, but remember you're
see, and
subtracting
it says,
the allowable deductions. So what is allowable?
okay,
You're including
okay,
the cost. So you're adding it here and then you're subtracting capital allowances.
okay, can you go back to the previous slide, please? In red, it says, any capital allowances will not form part of the base cost.
Oh, okay, sorry, I'm working out tax value, I think. Because tax value is minus capital allowances. Let me just check this again. On the 3rd of July, the company sold one of its ceramic tile machines. The selling price and the adjusted proceeds were given. The second-hand machine costs and was brought into use. Capital allowance until the date of sale of 120 was claimed. Mega Tiles had an assessed capital loss brought from the previous capital year. So the base cost would just be the 160. Full stop. Finished.
Yes, that's what I got.
Okay, this working I'm doing here is for, where was that working? Minus capital allowances. That's for tax value. Sorry, that's a mistake. Okay. Base costs. Base cost is just what you spent on the vehicle, and if it's post, it's all the cost minus any allowable deductions. Okay. Yeah, no allowable deductions here. It's not tax value. Okay, I'm just making mistakes here, silly mistakes. Okay, base cost is obviously different to
So
tax
what would
value.
be What would be an allowable deduction?
Maybe like a
Like,
valuation or something. There were examples of this. Here, amounts reducing the base cost of an asset. Do you see that?
yes.
Yeah, so they say here permits any large range of expense taken into account determining the base cost. However, if the expenses listed in paragraph 20 have been subject to normal tax deductions, they'll be excluded. So see, you can't claim it twice.
So in the previous question, when we did the warehouse, you wouldn't have minus the 90,000. Oh no, you still would have. That's agent's commission. Never mind.
Okay.
Got it.
Okay, yeah. So it's other costs, other stuff that is allowable.
Okay.
I'm gonna leave that there. We didn't actually need it though.
I think you should change it because it when you sum up at the end. So the adjusted proceeds was 248.
But I'm just using what the textbook had given. So obviously the textbooks, not textbook, the question papers amounts aren't correct because if you do the calculation to work out the recoupment is different and the adjusted proceeds is not in line with what they've given you. So that figure should be 152.
But when we calculate it, because they didn't ask us to calculate it.
Yeah, if they didn't ask you to calculate it, then you wouldn't do it.
Yeah, so I just left mine as 248. So
No,
when
I'm
I
not going to
calculate
change
at
it to
the bottom,
248. I'm going to leave it as is because if they did ask you to calculate it, then you have to calculate it correctly.
okay.
Okay, calculate the capital gain or loss. All right, so here we need to calculate. All right, so if I calculate the capital gain or loss, the capital gain or loss is going to be adjusted proceeds. Adjusted proceeds minus the base costs. Okay, so capital gain, adjusted proceeds minus the base cost. The adjusted proceeds would have been 252. So asterisk, not in line with the calculation above. Okay, if you use what's given, you're going to get the 88. But if you don't use what's given and if you had to calculate it correctly, it wouldn't be accurate because they told you in the question that it was 160 and they told you the capital allowance is 128. So,
In the paper, I would just use the given.
yeah, that's fine. Just use the given and just state you're using the given because this wasn't necessary, this was additional. Okay,
Yes.
see, this is how I pick up errors or mistakes in the question paper when I do the questions because I don't just use what they're given because this is obviously not correct. The adjusted proceeds is incorrect. The adjusted proceeds should have been 152. This is what they should have given as the adjusted proceeds. So then the capital gain should be, what is it? Where's the 152? less the 160. So then here you would have a capital loss of 8. Okay. Is that right?
Yes.
Okay. What else do we have here? That was G, that was H. I is going to be looking at the capital gain or loss. Obviously, you're going to be looking at all three. So you're going to be taking your warehouse machine. Was the warehouse machine right? No, we need to change
No.
that. It was 0. Wasn't it?
Yes.
Yeah, the
Would I
capital gain or
get
loss was
positive
0.
mark
What's
for
wrong?
this? Would I get positive marking?
Yeah, you'll get working marks. So whatever you put, you shouldn't be penalized because obviously if you make a, so this is from above.
Yes.
Okay, capital gain or loss of the warehouse and the machine. We need to show that. So it would have been 0 plus. Okay, are we going to use yours or we're going to use mine? Okay, I'm going to use yours then because you're just using the figures in the question.
Yes.
Okay, so you want to use?
The 88.
88. Okay, why does it say 160 there?
Because you took out my formula at the top.
Oh, okay. Okay, so we're going to put 88 here, plus 88. All right, and then we need to take out the previous year's loss, which you did do. That was the 2 that we read. Yeah, that's fine. Okay, so you got the 88, you minus the 2 to get the 86, you multiplied it, and then you worked it out. Yeah, that's perfect. Okay, how would the valuation value of the warehouse on the 1st of 2021 be determined, assuming Megatiles did not have the records of the original cost and never claimed any capital allowances? Then that would have been okay, so let's read it again. Valuation date value of the warehouse, no original costs. Okay,
And no
so this was for the machine on 1st of October, so on that date. So if it's on that date, they want to know what the valuation value is. If it cannot be determined, if the pre-CGD commencement base cost cannot be determined, then the valuation value is the highest of. You'd use this one.
But how would you get the market value would have been my thing.
Market value, that's why you get those appraisers.
Oh, okay.
Okay, an appraiser is the one that determines the market value.
Okay.
So the answer to this question would be that. Okay.
Okay.
Does it make sense?
Yes.
Okay. All right. I'm getting a little bit fatigued, so I don't know if you'll be able to manage question 4. Is that all right?
Yes.
Yeah. So I'm feeling quite tired at the moment. It's been quite a lot. Was this question difficult? How did you do? I can try just briefly look at it and see. List the requirements to discuss whether the receipt of 5,000 deposit would constitute gross income. Okay, if it's gross income, you need to follow the gross income inclusion rate. So did you use, this was chapter 4, I think.
Yes, it's the definition.
Correct. Definition of gross income. Did you use the definition of gross income?
Yes.
Okay, gross income, you would just motivate and where is it? Here, this one. Okay, you would work through each point. Point 1, point 2, point 3, all of that. Is that what you did for this question?
Yes.
Okay, where is it? Further down, I think. Yeah.
Yeah, it's down.
Okay, this looks like theory, actually. Okay, this isn't too bad. I think I've got enough energy to get through this last bit. Okay, number 1, you've got the definition. Perfect. Happy with that. I assume your conclusion is accurate after having looked at it in detail.
Yes.
Okay. Number B, Okay, this is the provisional tax payments. Okay, this we did last week actually, so it should be similar. What did you get? Okay, there's part B. Okay, so let's see. You've got your provisional tax payment. You've got your working. That's fine. Calculate the second and third provisional tax payments of WOW Limited for the 2018 year of assessment and specify which dates both provisional payments must be made. Then you said, assuming the 20, so briefly explain why the taxable income could not be used as the basic amount. Okay, so the basic amount is the next bit. Obviously, this is the second and third provisional payment. So you need to look at the first. Did they give you the first? Yes, they did.
Yeah.
Okay. The second provisional tax payment, you need to look at that 1 million thing, which I see you've done, which is good. Okay, is it lower than 1 million or greater than 1 million? What was it? It was lower than 1 million.
Yes.
So if it's lower than 1 million, therefore choose the lower amount between the basic and the estimated. So did you do that? Did you choose the lower figure? What was the basic? Let's see. You've got the 8743, including taxable gain. You've got an estimated taxable income
of 902.
Yeah.
So the previous one was lower.
The estimated was lower, higher. It was higher then. So the lower, yeah. So that's fine. 874 is correct. You would use that figure because that's the lower of the two.
Would you do anything with the 30,000?
Including, in brackets, they say including the taxable capital gain. If it's including, don't you have to take it out? Let me check that. Where's my notes? Let's just go to this actually. This would have been the first book. I hope this is book 1. I think this is book 1. Where's the provisional? Okay, let's see what they say here. Okay, here's the provisional. Okay, they didn't mention anything. They just said refer to the textbook. Okay, let's refer to the textbook. Okay, yeah, provisional tax, penalties. Okay, no, we don't want penalties. We want the actual payment. So this will be paid 75. Here, first provisional tax payment. Okay, so we spoke about the first provisional tax payment that they actually gave to you. There's no mention about anything there. Let's just see here. Here, exclude. There we go. There's the answer. Note that the basic amount must exclude any taxable capital gain. You must take it out.
Okay.
Okay, did you take it out?
No.
Okay, that's that is a correction. So let's just correct it. Minus what is the amount? 32,000. Make sense?
Yes.
Okay. Okay, so we took that out. Then you times it by 28%, and then you got that. Less the first provisional, then you got the second. Yeah, that's perfect. That looks fine. Are these amounts going to change? I think so. No, it's not going to change. That amount stays the same.
Yes.
This amount will change.
Oh, yes.
Okay, then the third provisional tax payments. Let's go back to the textbook. To work out the third, determine the actual taxable income. So what did we actually have? So we need to go look at the question. What was our year of assessment? Here, it was 2018, hey?
Yes.
Yes. So what was the actual?
It was the 915.
115, yeah. 915 is correct. Times that. less the first, less the second. It's referencing correctly, gives you that figure. That's 100%. I'm going to just delete that, okay?
Okay.
All right. Is that all right? Is that okay? Happy with that?
Yes.
Okay, perfect. At least we did manage to get through that. Sure. Yo, tired. Sorry. I had quite a long day, so my brain's a bit fried at the moment. But I hope it makes sense. I hope you're okay with this for tomorrow. Hey.
Friday.
Is it Friday only? Okay, you're only writing on Friday, so you still have a day. That's good. You can do a little bit more revision and then you should be fine. But this is looking good. I see you've got nice templates here. So I would use these on Friday actually. Okay, your workings look good. I just want to see, what did you say here? All requirements of the gross income have been met. Yeah, if they're all met, then you have to include. Yeah, so if you can tick all the boxes, it's perfect. Yeah, okay. The biggest consideration here is if it's capital or not. I'm curious to know if it was capital or not. What is this for? A deposit.
Oh, it was a warranty. Oh, no. This is a different question. Oh, yeah, it was a deposit. Sorry. That's not capital.
A deposit from a client who requires a photographer to take photos at a corporate golf day event. In terms of the corporate photography contracts, Adwire issues to all their clients, 50% of the deposit of the full fee is payable to secure a photographer and a date. The outstanding fee is payable on the day of the event. Okay, the deposit is non-refundable should the event be cancelled. Right, so yeah, should this be... it's not capital because there's no enduring, there's no tree. Remember the tree and the fruit?
Yes.
I would actually talk about the tree and the fruit here if this was theory, because they might give marks for the cases. I know case law, sometimes they give marks for that. So maybe
I just reference and this one I didn't, but the main point that I normally use is enduring benefit.
Yes, that's good.
If it's not there.
Yeah, if there's no enduring benefit, that's also good. Yeah, the tree and the fruit, the enduring benefits.
The one, I don't know which question paper it was, but one of them was kind of tricky where it was a warranty that they offered.
What did my answer say? What did my solution say?
Oh, no, I didn't mark it yet because I still have one more question left.
Okay.
But I'll go through your suggestion.
Yeah, check it. If you have any urgent things, you can just WhatsApp me and I'll have a look.
Okay.
Okay. All right, that's good. So another past paper complete. At least we've covered this one. Feeling okay for Friday?
Yes, it's just like, I'm glad I clarified like the 55% and the doubtful debts. That one was...
Yeah. Yeah, we spent quite a lot of time going through that early on, so it was definitely worth it, because at least we can make sure that this is covered properly. Be careful, look out for those doubtful debt ones. It's going to come up, definitely. It always comes up. And now that they've changed it slightly, it's going to be a bit different.
Yes, so I'm happy we went through that.
Yeah, I'm going to change the color of this. And then I'll email you what we did today. Yeah, I'm going to just save this and then send it off now, okay?
Okay. Perfect. Thank you so much, Anthony.
You're welcome. Good luck with everything, hey? And if you do any other modules that I do cater for, just let me know. We can always plan something maybe next year when you start what will be your third year or final year.
Yeah, but with my modules, I'm kind of taking it easy because my flying's back.
Yeah.
Kind of on track.
Yeah. So just see how it goes. But yeah, I'm always available if you need me. So just let me know ahead of time and we can always plan.
I definitely will.
Okay. All right. Good luck for Friday. Get your distinction. It's looking good, eh?
I will try my best.
Okay, nice. All right. Bye, Cheryl.
Okay, thank you. Bye. Enjoy.
Thank you.
Take care.